Everyone, Jules here, and today we're so excited to kick off the Power 20 by 5,000 Keys. So it's a short 20 minute, with some time for Q&A. It's 8 sessions. It's starting today. So it's Tuesday and Thursday at 12 p.m. On Saturday, it's 10 a.m. And we're kicking it off today. We do have a moderator, Kristen, with us, and Christina is here. She is in Bangkok. So we'll just go ahead and get rolling because we appreciate your time. So take it away, Kristen.
Yes. So I want to talk about just like why wealthy people are getting into multifamily or apartments. Christina, when people think about investing, most think stocks, mutual funds, or retirement accounts. Why are so many wealthy investors also allocating capital into apartment buildings?
That's a great question, Kristen. And, first, I just want to clarify this isn't about stocks versus real estate. It's more about diversification of a portfolio. I mean, I own stocks. Many investors own stock. I have the traditional 401ks and everything else. So this isn't a question of, whether one is good and one is bad. It's more about why do sophisticated investors often allocate a portion of their portfolio to multifamily real estate. And that's because they're able to focus on multiple income streams, right? Their investments go up in value. Multifamily investors can potentially benefit from several wealth building drivers at one time, which, the team is going to get into because apartments aren't just businesses, right? They're not just buildings, they're also businesses. So when I look at an apartment community, I don't see doors and windows, I see income, expenses, operations, and the opportunity to improve performance. And so with real estate, you really have more influence versus just, stock market, which you really have no control over.
All right, that's a good one. Um, just kind of getting a gauge on like the people in here. How many people would like their investments to eventually like replace part of their paycheck?
Me all day.
Oh, yeah, same.
Especially
I'm
right now.
definitely guilty. I don't or I haven't invested anything in stocks yet, but this is something that I'm researching. So definitely uh, wondering if other people had the same idea. Um, With wealth building, Julia, hopefully you can help me with this one. The second wealth builder is appreciation. What does that mean for apartment investors?
Okay, so that's a good question. When I think of appreciation, I think of it means something that's like gaining more valuable over time. Okay. So how many of us here has purchased a house over, I don't know, over a decade or maybe within the past 5 years? Anyone here? Okay, perfect. So when I think about appreciation, like if you purchase a house that was worth, I don't know, let's say 200K 10 years ago, and it's worth 10 years, say 400,000. Well, especially here in Florida where I'm at, right? So price appreciation is incredible. That is appreciation. So from what you purchase it to the value, what it's worth today, right? And how we align that with apartment buildings, it's the same thing. So, you think about the rent increasing, the area may improve because they're getting money from the government or, the city to re-gentrify the area. And also, as time passes, the property value goes up. So, in essence, that's appreciation, right? And these are things that, people like us, investors, we look for. And when we're purchasing a property, or in this case, apartment buildings. So it's not that they're just, besides earning income, they also want to build wealth for the future. So think of this as a future. You talked about passive. So that's something that's built in. So the simple takeaway would be if you look at it, cash flow is today and appreciation is well tomorrow. Sorry, I'm looking because I have to let people in, but that's how I think of it, right? So cash today, and appreciation is for later on. Does it make sense? I'm trying to get it the simplest way, like when I started. Okay, thank you. Darren gave me a thumbs up, so that means it's good.
I believe so. I think I heard someone get off and ask a question. I don't know if I was imagining that.
Any questions? If you do, are we taking it live, Christina? Welcome
I think
everybody. That
We'll do it
just
at the end just so we can stay on
on
20,
task.
right? 'Cause
Got it.
yeah,
Perfect.
we want to get everybody in and out and not take up too much of their day.
Okay, perfect.
Okay. Yes, that does make sense, Julie. Thank you.
Okay, perfect.
All right, wealth building. Honestly, I don't think
Is Leah on?
I see Leah. I have one question for her.
I'll just throw it out. We'll take
Yeah.
it turns, Christina and myself.
Okay, sure thing. So, this is about debt pay down. This is the one that like many people don't really think about, and certainly I had questions on. Like what is debt pay down and why is it so powerful?
Well, I'll take this one, Julie. I think, one of the great things with apartment buildings or large real estate is that you have a hidden wealth builder, right? People don't realize that as you're paying down debt, it's the tenants who are actually helping to pay the mortgage. So you've got a property that's paying for itself. And let's just say you bought a building at $1 million, and then 10 years from now, the value is still $1 million. But guess what? The debt has been paid down over that 10 years by the tenants. And so your equity has grown in that 10-year period. So that's why debt pay down is such a huge opportunity that most people don't realize with larger real estate complexes.
Yeah. And just to also add to that, so when you're thinking of well building, and when you're underwriting, so that's something that you definitely want to look at, right? So you're looking at what your PITI, your principal interest, your tax, and your insurance, make sure that's covered. And that, is going to, like Christina said, the tenants are going to help you pay down that debt. And that's a huge tool, right? And you monitor that because after so many years of owning that property, it scales. So it's compounded. So you definitely want to take advantage of the debt pay down.
And this is more of like kind of like a waiting game because most people when they hear like 10 years are just like, ugh, I want it like now. But so this is the idea of just waiting and understanding that it's the slow and steady that gets the most benefit out of everything. Okay. Um, so another question. Unlike stocks, apartment owners can often influence value. Can anyone explain forced appreciation? I guess that's what you would call it.
No, that's a great question. This is where multifamily really becomes unique because unlike the stock market, we aren't in control, but as operators and apartment owners, we are in control because we can improve the operations to make it more efficient and reduce the expenses. We can increase the income, especially in many cases, we're buying apartment buildings where the existing rent is much lower than the market rent. And these two factors alone will help to increase the value. I mean, even if you had a small apartment complex of 50 units and you increase the rent by 50 units a month over a year, people don't understand that that compounds and your value can go up to over 900,000 versus where you purchased the property. So this is where multifamily has a lot of these opportunities for you to improve the operations and also increase the income, which over time will help to increase the value of the property. So that's what we mean by forced appreciation, because the actions you're taking are now forcing that appreciation and the value of the property to go up.
Okay. And that kind of go coincides with the just like wealth building being slow or taking more time. Because I'm thinking of just like my little duplex that I have, that you wouldn't increase the rent on those tenants like exponentially. It'd be like a little bit over time just because you're not trying to kick people out. And I think
Exactly.
you have to think about that.
Yeah, you don't want
Exactly.
to have, I'm sorry, go ahead, Christina.
Yeah, I'll say that's exactly a great example. And the other thing that people forget versus single family is if you have a single family residence and the tenant vacates for whatever reason and you're trying to replace that tenant, who's paying the mortgage
Ooh,
while you're
yeah,
finding a new tenant?
yeah, you
The
are.
owner, right? The
Yeah.
owner is. But when you have multifamily, usually you're underwriting it so that if you have X percent of vacancy, it still pays for itself. And that's really where you have a lot more opportunity because if one person vacates, and in many cases, even if 10 or 15% of the tenants vacate, the property is still paying for itself.
Yeah, and I just wanted to add, as far as the force appreciation and value add, looking at it from a multifamily, you're just like, you're in a single family, you're putting all your eggs in one basket, but with a multifamily, you're sharing that risk, right? And it's all about risk and being able to mitigate some of the risks. So when you underwrite, you want to make sure you have that built in there for any kind of vacancies. So you won't increase the rent too much, like you said, Kristen. So.
All right. Um, let's talk about tax benefits. Julie, without giving tax advice, why do investors often mention tax advantages when discussing real estate?
That word taxes, right? They say, the only two things that are inevitable or evitable is like taxes and debt, right? So again, I'm not a CPA, I'm not a tax consultant, but who here wants to pay more taxes than is allowed? No one, right? So that's where, multifamily comes in, right? One of the main reasons us as real estate investors invest, whether it's a single family or whatever the asset class is, multifamily, and that's what we chose, is because of the tax benefits. So one way is the government, they want to provide more housing, right? And there are incentives that are designed to encourage people to invest in real estate, as we know. And one of the most common one that we as investors talk about is called depreciation. Anybody ever heard of that word called depreciation? Yeah. So we all want to take advantage of it, right? And of course, everyone's situation is different. So I encourage you to talk with your CPA. But in general, what it looks like is basically investors like real estate because it can provide, multiple streams of income. We've talked about like the cash flow, we've talked about appreciation, we've talked about forced appreciation, and now this depreciation is another one. So, what your CPA is going to advise you on your structure, whatever the asset is how you can depreciate that asset, which in turn is going to give you money back in your taxes. It may not be physical cash, but it does help to lower your risk. So, if you're a real estate agent or a doctor or any one of these high earning income professionals, you want to, invest in assets like these to help reduce your taxes, and depreciation is what helps. It's one of the things that helps. Does that make sense?
Any questions on that? Okay. All right. So let's say if someone invested in an apartment building, could they potentially benefit from all five of these wealth building drivers at the same time?
You know, absolutely. I mean,
Absolutely.
tonight, yeah, I was going to say that's a great thing with apartments and multifamily. It's not about convincing anyone to invest in apartments. It's really understanding why do many wealthy investors choose to allocate a portion of their portfolio, right? So they diversify their investments, and most of them will have multifamily real estate included. And so we covered five primary ways apartment owners can potentially build wealth with one asset. And I think that's the beauty of it. It's cash flow, right? The today money that Julie talked about, the appreciation, which is the wealth building for tomorrow money. You've got the debt pay down, which is being paid by your tenants. You've got forced appreciation, which as operators or owners of an apartment, you're in control of because you're managing the expenses and you're also helping to increase the income. And then there's the potential tax advantages. So in one asset, all of a sudden, you've got five potential ways to build wealth. So the key takeaway is that multifamily investing isn't just one investment strategy. It can create multiple wealth building opportunities working together simultaneously. So, I just ask everyone and I encourage you to ask yourself one simple question. Which of these five wealth builders are you currently benefiting from in your own portfolio today? The answer is all five. Fantastic. You're doing a great job. Keep it up and keep building more. And if the answer is one or two, then perhaps there are opportunities to continue learning and expanding your investment knowledge. And so our goal with the Power 20 series is not to sell anything. Our goal is to help you become more informed, more confident, become a more confident investor. And regardless of where you are ultimately and what path you choose, we really just want to spend time and appreciate you spending your evening with us because as we're learning and we're diversifying our portfolio into more apartment buildings, we just want to encourage everyone to learn along with us.
Thank you,
All right.
Christina. Well said.
Thank you, Christina. Thank you, Julie. So for everyone on call, we do have homework. It's very simple. Review.
Oh,
Think of what Christina had said. Review your current investments and ask, which of these five wealth building drivers am I benefiting from today? I can be honest with you, I probably only have one. So write down those answers and then take stock. And let's work together.
that's awesome. So, the goal behind the Power 20 is just to come on, give you guys some knowledge that we have. We're all learning. And as we continue on this journey, it's great to have you guys see where we're at and what we're doing, and we'll provide value and would love to hear, your feedback. We'll open up to questions. I think Kristen will let us know. I think we're right on the 21. We're doing great. So we did cover it in.
Like a power lunch, right? Or a power
Yes.
nap, whichever one you choose.
All right. Do we have any questions? Any feedback?
Thank you, Heather, for being here, and Darren, Sunshine, Char, Emmanuel.
Of course. Thank you for hosting.
You're welcome. Any feedback, Heather or Darren? Questions?
No, I really didn't know what to expect. So I popped in just to, honestly, out of curiosity. I'm like,
Yeah.
what's she going to talk about?
Yeah.
Yeah. hmm
I have a question for you, though. So, of the
hmm
investment strategies, what are you getting from your I know that's part of the homework, but on the
Yeah.
top of your head, what are you getting from your investments from what we talked about?
Um, well, right now I'm focusing on the active income and then leaning towards then acquiring. So then that would lead into the tax advantages.
Absolutely. That's perfect.
Yeah.
Perfect way to
hmm
do it. How
Okay.
about you, Darren?
Only thing I've been getting into some tax advantage, but that's kind of why I'm wanting to push harder into the real estate side of it, is because I'm lacking the other four.
Hmm. And how are you seeing that? Like, how are you going to pursue those other benefits?
I'd like to get into mobile home parks. Originally, I've got more experience in multifamily,
Hmm.
um, but I don't know if that experience translates into the management side of the multifamily. I was when it came to um, asset preservation or capex expenditures, that's the side that I was on. So the actual other side where that I'm kind of lacking in that skill. So I figured I'd move more towards like a mobile home park where I'm a little in between,
Hmm.
and then kind of work my way into that aspect. I don't know if that thought process is wrong, but you know, I know even less about mobile home parks, but it seems easier to just manage the property and not have to worry about the structure while I'm running a business than to have the whole system that I have to worry about all at one time. That's where my thought process was, at least. If I'm wrong, please let me know because that's where I'm heading right now.
I wouldn't necessarily say you're wrong. It depends on what you're looking to do, but I totally get, that's why we're opening it up to, joining us on there. So you learn about the multifamily and investing and getting the returns from doing deals together, and partnering. But I do understand the aspect of mobile home where it is a business as you get it started, right? So you have that business while you're learning, and then you're also going to get the passive income as well. So it's just, what's right for you. So I like that you're
I
looking at
like them both. That's my problem.
Well, we do have an opportunity if you'd like to hear a live case study of a multifamily acquisition we're doing. I think, Jules, maybe you can drop the link and they can join us on the longer call that we have that goes through an actual property. And it kind of shows you the numbers. And that way you'll have an opportunity to see a real life case study of multifamily in action.
Oh, I'd love that. Yes, please.
Char, how are you?
Okay, thank you for this call. I just saw the link pop up in the WhatsApp message. So I appreciate the education and what you're speaking to here. I have a few small multifamilies like triplexes, quad. So I understand the concepts, and what I would really like to do is scale up. So I'm excited to hear more about, just bigger multifamilies. So if the call that you spoke to just a minute ago is showing the underwriting for a bigger multifamily, I'd love to sit on that because I have like this mind block, like how do you scale up? And I know some of that's creative financing too, because I've always just did traditional financing with a bank, and then you need to bring the 20% down. I'm like, well, I don't have like, the 20% down for a big multi. So there's a little bit of just that understanding how to scale up. So I'd love to continue sitting on these calls and hear more about how you're doing those bigger deals.
We definitely like for you to join us. I mean, I remember negotiating my first 22 unit, and I was doing single family, and then I went into duplex, and then I did a fourplex, and I realized, wow, it was just as hard or easy, however you want to look at it, to do the 22 plex as it was a fourplex. And then now our current acquisition is a 32 unit. So it really, once you understand the numbers and the benefits, it really just does get easier
Hmm.
in terms of scaling up to larger properties.
Okay.
And so the best thing about it is we're doing it as a team. So that's, we're leaning in on each other on this one.
Yes, yeah, for sure. That makes complete sense. So that's what I want to learn, like how to scale up and see how that's done. So yeah, for sure, I'll continue learning. I would imagine is it less, do you find it being less competition at a bigger multi as compared to those like 3, 4 plexes?
Definitely still a lot of competition in the larger multifamily space. It just depends on, first is location, what state do you want to choose, and then what type of asset, because you still got your A plus down to your, D class.
Yeah.
So if you pick a lane and you stick to it, then you'll find a lot of success there. I think it's really hard in real estate because there's always shiny object syndrome, right? Should I do single? Should I do duplex? Should I do RV?
Come on, yeah.
So it's really kind of staying focused on one, and that's where you'll find the best success.
Okay, I hear that. That makes sense. Thank you.
You're welcome.
Thank you, Christina.
You're welcome. So
Quick question.
definitely, I mean, join us on the upcoming call with our case study for Don Q. And we're gonna, thank you, Julie, for kicking this off for us. We're gonna continue this building on this foundation with another practical topic. We're gonna do the Power 20s, designed really to help you better understand how investors evaluate opportunities and build long-term wealth. So until then, we encourage you to stay curious, keep learning, and please keep building.
Yes. Welcome, Kelly. Did you have any? I know you just popped in. It's
Yeah, sorry. I got on late. My husband told me that this was going on, so I wasn't up on my WhatsApp app. So he said,
no
"You gotta get on there with them." I was like, "Okay." So here I
no
am.
worries. So just to recap, it's on Tuesdays and Thursdays and Saturday. So Tuesdays and Thursdays at 12 p.m. Eastern and Saturday at 10 a.m. Eastern. And the link is in the WhatsApp. And Kelly, we have a longer call scheduled for tonight at 7 p.m. where we actually have a case study of a property we have on a contract. So if you want to join that, I just dropped it in the chat, but I don't think you'll see it because you joined after. So I'll drop that in there. And the goal behind the Power 20 is just small bites, just to get you and thinking about your, where you want to be in your investment. And we'd love to have you on the journey and join us.
Great, thank you. And these are all East Coast times.
All East Coast time. Where are you at, Kelly?
On the West Coast.
Oh, okay, okay.
But that's okay. I can set an alarm and get up early.
All right.
So,
Thank you.
yeah.
Thanks everybody for joining. Enjoy the rest
Thanks,
of your
everyone.
day. Have a great day.
Thank
Thanks,
you.
Kristen.
Thank
Thanks,
you.
Julie. Bye, everyone. Thank
Bye.
you.
Thanks, y'all. Bye.